Welcome back to another portfolio review video. It hasn't been that long since the last one, but we continue to see the markets continue higher and higher. For this update, I made some significant changes to the dashboard spreadsheet to help provide some more insights when it comes to portfolio performance. So if you enjoy these types of videos and want to see more, feel free to like and subscribe to help support the channel. The goal for the end of the year is 3,000 subscribers, and we just need about 400 left to go. We had started the year off with 502 subscribers, and have now grown to over 2,500. So let's finish the year strong and reach this milestone for the channel. And with that, we'll now get into the portfolio review. Starting within Wealthsimple, this was recorded on October 28th after the market close. On the home page, here you'll see the entirety of the accounts are worth $139,540. Keep in mind that this is also including the checking account, which isn't actually invested into the market. So if we were to click into the returns, we can see some more accurate performance insights. Here, the total portfolio value is $135,311, with $82,583 in net deposits. For the all-time return, it is $52,728, of which $21,144 is unrealized. If I just pull up a comparison from the last video, which was back in August, we can see that the numbers have changed a lot in only 2 months. First of all, the overall account value has jumped up $16,315. Of that $16,315, $2,200 of that increase was from net deposits. Then the all-time return, which is everything including the unrealized gains, distributions, and actualized gains, went up by $14,115. As for the unrealized returns, that has increased by $9,090. Looking down at the overview section, we can see the rate of returns. So the simple return rate has gone up from 48.04% to now 63.85%, which is an increase of 15.81% during this time. Then for the time-weighted return rate, it has increased from 10.62% to now 12.86%, which is an increase of 2.24%. What this time-weighted return rate is how the portfolio has performed since I started investing, without the factors such as deposits and withdrawals. If the account is over a year old, then this becomes an annualized rate. So over the last 3 years, my time-weighted return rate per year has been about 12.86%. If on average the S&P 500 returns approximately 10 to 12% per year, then this value aligns very well with the overall market and is even on the upper end of the spectrum. Next, for the realized return all time, as explained in the previous video, is mostly due to the changes in my RRSP. Overall, I am positive on my realized returns, if you include all the distributions are also paid while holding the ETFs. But since I actualized those losses is why you see it in the red here. And finally, for the dividends earned all time, this has increased from $33,205 to now $38,383, which is an increase of $5,177. So as you can see, the last 2 months here have been really positive for the portfolio, and a bit wild knowing where it was after the Liberation Day sell-off. Going back now to the main page, we can scroll down to see all the accounts in the portfolio. The first account, as already mentioned, is a checking account, which is just holding cash. Then the actual investment accounts are the TFSA, RSP, and 2 non-registered accounts. In general, I consider the TFSA and the first non-registered account as my main portfolio, and will be the 2 I will cover in this video. So let's first start with the TFSA account. I started this TFSA account at the very beginning of this year, and is currently maxed in terms of contribution room. The remaining amount is managed elsewhere, and will probably get transferred over to Wealthsimple eventually. On the 1-day return, we're flat at 0%. Then on the 1 week, it's up 6.09%. Over the past month, it is up 10.66%. And on the 3-month, it is up 16.81%. For the year-to-date, 1 year, and all-time return, it's going to be the same, because as mentioned before, the account was only started this year. So it is currently up 32.10% all time, which is in my opinion very good for just 10 months since January. Then clicking in to see the performance insights, we can do the same and compare side by side with the last update. The total value of the account is at $17,173, which is a $2,455 increase over the last update. For net deposits, they've stayed the same, as my contribution room is maxed. And for the all-time return, it has gone up by the same $2,455 mentioned earlier, because there are no new deposits made to the account. Finally, for unrealized returns, it has increased from $754 to $2,661, which is an increase of $1,907. Looking at the next section, we can see that the simple return rate is the same 32.10% as you saw on the previous screen. But when comparing to the last update, it has increased significantly by 18.89% in just the 2 months. That kind of increase is what you would see in a very good full 12 months in the index. And there isn't any funny business going on, because you see the net deposit value hasn't changed. So this is just the returns for the only 2 holdings I have in this account, which are HHIS and QDAY. Then for the time-weighted return rate, it is slightly lower, likely because I overcontributed by accident and then removed some of the funds from the account earlier this year, which may have affected the rate. There were no changes in terms of sales, so the realized return here stays the same. Then for the dividends earned all time, it went up by $548 to now $2,011. So overall, the last 2 months have been very good, and it's primarily due to all the big tech deals being announced in recent weeks. But just remember that what goes up quickly can also drop down just as fast. And because this account specifically is 100% based in the tech sector, if there's a crash, then it could hurt just as bad. But as you'll see later on in the spreadsheets, I look at the non-registered and TFSA account together holistically. So while it may make up 100% of the account here, it is only a smaller portion of my overall portfolio. To see how much I was paid in October, I can go into the Wealthsimple app where it shows the breakdown. Here in the TFSA, I earned a total of $276.23. $182.50 of it was from HHIS, and $93.73 was from QDAY. Right now, all the distributions are being reinvested into QDAY to help build out the semi-monthly distributions, but eventually it'll be split a bit more evenly between the two. Now let's go back to the main page and scroll down so you can see the actual values of the holdings. If you want an in-depth reason why I chose this pairing and why it's probably my favorite combination of holdings right now, you can watch a previous video I made on the Daymax ETFs. In the future, I might consider adding some crypto exposure as well to this account, but I might hold off until I have more contribution room or see what future products might come out. Okay, let's now move on to the non-registered account to see its performance. This account has been around for just over 3 years now, and is mostly considered my main portfolio because of its size. On the 1 day, we are basically flat with a 0.08% return. Moving on to the 1 week, it is up 4.35%. And in the last month, it is up 5.44%. For the 3 month, it is up 13.36%. Then year to date, it is up an even 18%. Looking back further on the 1 year, the account has grown a very sizable 28.3% over this time. And finally, all time, it is up a whopping 77.44%. This kind of performance is far greater than anything I would have expected when I first started out, and it really shows how great the returns have been over the last few years. Going to the performance insights, and doing the same side-by-side comparison with the last update, we can see some big changes in the values once again. Starting with the portfolio value, it has well surpassed the $100,000 mark, and is now $109,820. This is a gain of $13,920 over the last 2 months. For the net deposits, I added $2,200 to the account during this time. As for the all-time return, it has increased by $11,720 since the last update, for a total all-time return of $47,930. Then for the unrealized returns, it didn't quite double, but it increased by $8,791, for a total unrealized return of $21,124 now. I believe this is the highest I've seen it since the start of this year, where it was at about $20,000. Part of me feels like this is a lot of money to be sitting unrealized, but I also see it as a buffer for pullbacks so the account doesn't flip red. I've been investing long enough now to not have it affect me when I see red, but this is nice to have available if I wanted to actualize some of it in the future. Now, for the simple return rate, it has gone up from 60.66% to now 77.44%, or a 16.78% increase over this time. With the time-weighted return rate, because this account has been around for over 3 years, it will show an annualized rate for this part. So on an annualized basis, it's increased from 10.59% to 12.9% per year. As already mentioned, the S&P 500 on average returns about 10 to 12% a year, so both these values before and after are more or less in line with that rate. Now because I didn't actualize anything over this time, the realized return all time hasn't changed. And then for the dividends earned all time, this is increased by $2,929 for a total of $25,593. All of this was then put back to work in the market for more growth and income. To see how much I was paid in the month of October, I can pull it up again in the app for you to see. In this account, I earned a total of $1,488.16 for the month. The highest payer was TSLY from Harvest, and I paid a total of $271.25. It is then followed by MSTE at $221.10, QQCL at $115.64, Bank at $110.55, USCL at $107.07, and then HYLD at $105.11. I'm not going to go through all of them, but here you can see where most of the distributions are coming from. I'll scroll down to the bottom slowly so you can see the rest of the payments. We'll now go back to the main page so you can see all the holdings and their current values. Feel free to pause here in this section if you want to take a closer look. In the next part, we'll go over the redesigned dashboard I put together so you can see what these two accounts look like in aggregate. Here on this new dashboard, I've tried to update it in order to reflect some of the metrics I've looked at in the past videos, but to also include some new metrics I wanted to look at. So some of this will look familiar, but there are some new changes that I'll hopefully try and explain why it was built. Again, this is going to be a combination of the TFSA and non-registered accounts, as these two together are what I consider the main portfolio. Firstly, on the high-level summary at the top, we can see the day P&L and total P&L. Those are the unrealized returns of the accounts, and will change on a daily basis. So, on the day of recording this, the accounts were up $64.57, and overall have $21,000 unrealized between them. After that is the total return, which is at $52,293, and that is the unrealized and realized returns added together from the current accounts, and also holdings I've held in the past. Looking at the weighted average yield now, it is currently at 19.07%. If I select the drop-down, I can also take a look at what the yield on cost would be, and right now that comes to about 21.19%. Then for the annual dividends, it is currently at $21,589. I start 2025 off with about $12,000 in annual dividends, which is approximately $1,000 per month. So we've almost doubled it right now, and I think with a couple changes I can hit $24,000 before the end of the year, which means I'll be over $2,000 per month to start 2026. Zooming in so you can see the values more clearly, the two accounts are now at a total of $126,983. The total deposits into the accounts are at $74,746.31, and the total amount invested into the market is at $105,983.56. And here is where we get to the first new section of the dashboard, and it's the composition and returns. I've talked about how the portfolio has been constructed in the previous video, but here I made it really easy at a glance to understand how each holding has been allocated. If you're interested in a more detailed video on the overall strategy and why the portfolio has been put together like this, let me know in the comment section below. This is something I feel changes often and continues to evolve, but I think I've come together with a new plan going forward into 2026. In any case, we can move further down to see how the total returns have looked like for our cover call ETF portfolio. The first bar is the total deposits I've personally put into the account so far. Then the second bar is the total returns that those deposits have produced. And lastly, the third bar is how the total returns are broken down into the three categories of lifetime dividends, unrealized profit or loss, and actualized profit or loss. Then below the bar chart is where it shows how that breaks down and what percent each one represents. As a cover call and income focused portfolio first and foremost, it makes sense that more than half the total returns have been through distributions. What is a bit unexpected is how high the unrealized returns have been, making up 40% of the total returns. And that is one thing to keep in mind, which is that most of these ETFs are still very much growth holdings, with just a smaller portion allocated to produce income. So it is very important that if you're investing into a single stock ETF, that you understand the fundamentals of the company you're investing into, and not just looking at the yield. This is still one of the biggest things I think many people might not truly understand yet when it comes to cover call ETF investing, and is what I try to show with these portfolio review videos. Then, for the actualized returns, these are gains I've made from buying and selling out of holdings in the past. This isn't the main focus of the portfolio to be trading in and out of positions, but it's always good to see positive returns from rebalancing or swapping out of holdings. At the bottom here is then the sectors and how the portfolio has been allocated between them. You'll also see the total return breakdown, and as of now, everything in the portfolio has produced positive returns. Moving back up to the top, here we'll have a new table to go over. There's still the usual consideration I keep mentioning in these videos, about how this comparison is based on a single lump sum investment into the index, but hopefully you've watched enough of these now to understand it. This is also just looking at the price return of the index, and doesn't include the dividends, but it is quite minimal and something else to be aware of when looking at these values. The reason I put this together is so I can quickly see how the portfolio's performance stacks up in comparison to the index over various time periods. As you can see, in many of the time periods, the portfolio has come out ahead by a fairly large margin. For the ones where the portfolio is behind, it is only behind by a few percentage points. But remember, if you watch my total returns video, the portfolio will see deposits to it over time, which will then gradually lower the total return value. So I would consider the portfolio to be on par or even ahead of the index since the inception, after taking into consideration all these variables. The next section here are the rankings of each holding under the various categories. I'm finding that this has been helpful in seeing the overall performance of all the holdings at a single glance, and to understand how they all rank relative to each other. In the first column, we have the allocations, where you can see that the indexes in QQCL, USCL, and HYLD make up the top 3 positions. Then the next column is the total P&L or unrealized returns. Some of the top performers here are ACT, YGOG, TSLY, and HYLD. After that is the annual dividends column, and this will be the projected amount of dividends I can expect from each holding per year. The top ones here will be all the high yielders, such as TSLY, HHIS, and MSTE. For the next column over, it will be the lifetime dividends column, and this is going to be where it shows how much I've received from each of the holdings since owning it. At the top will be some of the longest held holdings, and then some of the higher yielding ones. Finally, at the end here is the total returns column. Here, you can easily see which ones have returned the most, and right now that would be ACT with over 200% return, and YGOG with over 100% return. Overall, I'm quite happy with how much simpler and quickly this table lets me see the performance of everything at a glance. I'd like to maybe add a few more columns, but I think these ones cover most of the metrics I would mainly look at. Finally, at the bottom is the dividend history of the account and what I expect to receive in the coming months. Right now, we're just crossing the $1,800 per month mark, and the short-term goal would be to eventually cross $2,000 very soon. At the start of the year, I was just crossing $1,000 per month, so I'm quite happy with doubling that in just about a year. And here I would say about wraps up this review. How do you like the changes to the spreadsheets and overall format? I'm trying to see how these can provide more value, and would like to see if there's feedback in order to make these more useful. So if you enjoyed this and want to follow for more, consider liking and subscribing for future videos. Thanks for watching, and I'll see you in the next video.